Okay, this is the final continuation of problem 5.2a. So I showed you the sales account. We posted the entries to the sales account. I showed you where we posted the entry to the sales return and allowance. There was only one entry on April 29th. And then our sales discount on April 13th, where we gave a customer a discount if they paid early. And there's our the the sales discount of $55. And then here's our cost of goods, right? We're a perpetual method um, business, so here we're uh, going to record our cost of goods every time we make a sale. April 4th sale was 4,100. April 23rd sale was 5,120, and April 30th sale was 2,800. On April 29th, we had that return, right? We gave this sale return of $90. The cost of that return was $30. So here I'm going to reduce my cost of goods sold by that $30. So the net between these, here's my debits, and I'll subtract out this credit of $30, and I get a total debit balance for my cost of goods of 11,990. So now I can prepare my income statement through the gross profit for the month of April 2008. One thing I want you to note, look at this T account, right? Look at your T accounts. Here's your sales. It has a normal credit balance. Here's your sales allowances. That's a contra revenue account, so it normally has a debit balance. Here's your sales discounts. That's a contra revenue account, so it normally has a debit balance. Then here's your cost of goods sold. That will normally have a debit balance. All right, so let's create our income statement. It's a partial income statement. And I'm just taking the numbers right off of my T account. Here's my sales returns of 15,600. I'm going to net against that the sales returns and allowances of $90, the sales discounts of $55. Those two items, the 90 and the 55, give me a total of 145. So I'll put that over in this right-hand column. I'll subtract it from my sales in order to get my net sales of $15,455. Then from that, I will subtract out my cost of goods, which we calculated from all our entries, and that comes out to $11,990. That's our cost of goods sold. So when I subtract that from my net sales, I will get a gross profit of $3,465. Now, the problem's not asking this, but why don't we calculate the gross profit ratio? Let's just see what that ratio would be. So what I'm going to do, the gross profit ratio is calculated by taking your gross profit. So here I'm going to take the 3,465, divide that, I'm using the slash, the forward slash, divide that by my net sales of 15,455. So I get a percentage here of 22.224. If I multiply that by 100, or what I can do is use my percentage up on the toolbar here, and there's my gross profit ratio of 22%. All right, the problem didn't ask for that, but it's interesting to see what kind of gross profit is this company making. All right, that was it. That was problem 5.2a.